All right, everyone, Sunday night, Sunday prep. So give you a sense of what I'm focusing on here. So let's start with Amazon. So for March 19th expiration, got a couple of put credit spreads here. Sold the 3000s and then bought the 2980s and then got another put credit spread. Sold the 3150s, bought the 3130s. So a couple spreads for March. And then on April, we got a couple here as well. So let's see, for April, sold the 3150s and then sold the 3100s. So, all right, these are the kinds of trades I'm liking to focus on right now. Beautiful weekly squeeze here in Amazon. Awesome looking trend into the squeeze. So when you look at the structure here, it's with the orange dots. So it's the tightest form of compression that we can get. It's not a guarantee you're going to get a move to the upside, but in terms of probabilities, when you get the orange dots on the squeeze pro indicator, in plain English, we're building up a crap load of energy. And you're typically looking for that energy to get released in the direction of the overall trend, which up until this point for Amazon is to the upside. So, they're not the most exciting trades, but what I'm a big fan of this year, is finding these bigger picture squeezes on a weekly time frame, for example, and then just selling those out the money put credit spreads until it loses its structure, or in the case of Nvidia, until that patience gets rewarded. So I'm sitting here for weeks on end holding those spreads on Nvidia and nothing's really happening in my favor, but it isn't losing its structure. Continues to close above the 21. So, I think just kind of developing that patience to find those bigger picture squeezes in those stocks that could make a rewarding move and then holding on as long as you maintain the bullish structure with your closes above the 21. I think that patience can get rewarded. So with the weekly squeeze here on Amazon, especially as we continue to get more and more bullish momentum coming onto the histogram, I want to continue to hold on to those put credit spreads. That way, should Nvidia or Amazon ultimately make that move I'm looking for, I think it's so much easier to sit through the noise and to be patient and sit through the chop versus having to chase it when it finally does start to move. So, I'm okay if Amazon just continues to squeeze here and I collect that slow but good premium. But my life will be a little bit easier if it does make some move sometime soon. But I think a beautiful structure there, and I think Facebook, trading the squeeze is an art form, right? And a big part of it is the patience aspect. So, I do like the Facebook weekly squeeze, and I do think if the market does continue this trend to the upside, into the spring, into the summer, you should see Facebook trading at higher prices. However, we want to time our entries when the probabilities are stacked in our favor as much as possible. So to me, that comes down to the structure. A good looking weekly squeeze for Facebook, but it doesn't have that picture perfect structure. We're under the 21 and we have bearish momentum on the histogram. And if you look at the squeezes inside the weekly, you got a 3-day squeeze here as well. That's under its 21, no stack moving averages. And you look at a daily time frame, it's just some ugly stuff right there. So, a big part of trading those bigger picture time frames is waiting for the lower time frames, a 3-day, a daily chart, to have the same bullish structure. So, I do think over the next few months, we should see Facebook trading higher. But before I start putting my money in here, I'm going to wait for the structure to tighten up. So on all three of those time frames, the daily, the 3-day, and the weekly, once we start getting some solid closes above the 21, then I think we can begin to work into a position. But until then, it could be sloppy, and I think our money could be suited elsewhere. Another beautiful weekly squeeze here is Home Depot. So you do have earnings in a few days. I'm going to opt to not jump in before earnings, and we'll see how that goes. Should we get lucky enough that Home Depot is still inside the squeeze after earnings, I think this is a great candidate here for an April to May expiration swing. You can buy naked calls, you can sell the credit spread, but I think the big move into the squeeze leads to some potential upside. So we'll have to see how earnings goes, but for Home Depot, I would love to sell some put credit spreads. Looking to sell maybe the 260 strikes for April or May expiration, and then just kind of let it do its thing and see if ultimately over, a 60 to 90 day window, does that weekly squeeze fire to the upside. So I think that's a good candidate. And a couple more here that I'm focusing on. You look at Nvidia. So it's already starting to make its move here. And maybe you missed the initial part of the move. So I was fortunate enough to hold those positions for weeks on end, ultimately catching a nice rip here. But I think if you take a look at the weekly squeeze, Even if you've missed, call it the initial move, check out this last weekly squeeze. And this isn't to say this has to happen again, but if you just think in terms of the buildup of energy inside the squeeze and then the release of the energy once the squeeze fires, not always, but a lot of times, when a weekly squeeze does fire long, you're going to have momentum and opportunity in that name for weeks on end. So if you're a day trader, a scalper, or a swing trader, Nvidia, once it fires a weekly squeeze, that's a place that you want to be looking for opportunity. So as we're potentially seeing this brand new weekly squeeze trying to fire to the upside, this could be a place where we can find some momentum. So, for Nvidia here, with the market pulling back to the 21 last week, this did pull Nvidia with it. So you got a nice dip down to the 21 here. That dip, I think, was a good opportunity to put on a little bit of exposure. So I did go all the way out to April with the put credit spread, and I sold the 550s and I bought the 545s. And as long as that weekly squeeze has that structure and is potentially firing to the upside, any dips to the 8, any dips to the 21, any lower time frame squeezes, I think any way you can work yourself into Nvidia could be a worthwhile pursuit should that weekly squeeze continue to fire there. So I definitely would like to get more of Nvidia, but we got earnings coming up. So with Tesla here, this is a big week for Tesla, at least for my positions. So on the weekly chart, we did hold up last week. So you still have a bullish structure here with the close above that weekly 8 EMA. I think we begin to close below that 8. You could be setting up for a move to the weekly 21. So looking at the daily here, a huge level of support is going to be that 50-period simple moving average, where we did test that on Wednesday before ultimately getting a nice bounce into the close. So for Tesla, I am sitting here on these March expiration put credit spreads. So there's a little bit of a hedge. I do have a call credit spread for this coming Friday with a short strike at 8.05. But with the put credit spreads here, yes, a couple of these are underwater. Sold the 820 puts, I sold the 800s, and then I sold the 750 by 700, which is still in pretty good shape. But, I'm liking the daily squeeze here, and it's losing a little bit of its structure. So I did want to give it, at least till that 780 to that 50 SMA here this week to see if it could hold up. Sure enough, it did. But you could be playing with fire here. So, I'm a big fan of not fighting the squeeze. And what I mean by that is if you look at the structure, no stack moving averages were under the 21, and the momentum on the histogram is negative. So, unless Tesla quickly cleans itself up here, we could be seeing a situation where the path of least resistance is to the downside. A squeeze is just simply a buildup of energy, and ultimately that energy is going to get released to the upside or to the downside. So for me to continue to hold on to those put credit spreads, we need to hold above the 50, which we did a good job of doing so last week. Preferably, I would love to see Tesla back above the 21, kind of get back on its own 2 feet, get that solid backbone again. And I still think we've got a clean daily squeeze that could lead to a nice push into that March monthly expiration. But this is going to be a big week. If we begin to flush under the 50 period, I'm going to have to make some decisions as far as risk management. So patience has been paying off this year. And I think for me, what I like right now is just, these trades that don't require, getting caught up in the day-to-day noise, just more so focus on a bigger time frame, give the trade plenty of time till expiration, and then in a lot of ways just kind of disappear and let it do its thing. That's what's been rewarding this year. And believe me, it's a totally different game than, say, sitting here and watching Amazon, waiting for it to begin to break out, and then trying to jump in. There's positives and there's negatives to trying to get here early. I prefer to find the high probability setup, sell the out the money put credit spread with the willingness to hold on to the position, not necessarily if it rips in my favor, but more so simply if it continues to hold up that structure. So I can find a bullish weekly squeeze just like the one in Amazon, basically place a bet by selling short strikes towards the bottom Bollinger Band that it's not going to fire in the complete opposite direction. And as long as it doesn't do that, I'm in pretty good shape. So it requires patience and discipline, but ultimately, as you get closer and closer to expiration, you get some serious premium rolling in. So Amazon is not the most exciting trade in the world right now, but between all those different credit spreads, there's a good $20,000, $25,000 in max potential profit sitting there. So you look at, say, March 19th expiration. Well, these positions haven't been doing much, but as we're getting, a few weeks away from the expiration, very quickly those 3,000 puts we sold are starting to lose some serious premium, all of which is going into my pocket. Same thing with the 3150s. It's not exciting on that day-to-day chop and the day-to-day noise, but as long as the setup maintains its structure, as you get closer and closer to expiration, those out-the-money puts that you sold to some poor schmuck, they start to bleed out, and it's a beautiful thing. So that's what I'm focusing on right now. But with that being said, I got to get out of here. Let's see. Yeah, I got to get going in a few minutes. I'm going bowling tonight. Wish me luck. But I'll talk to y'all soon. If you haven't already, go ahead and subscribe. Until the next video, be safe.